Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Eric Schuppenhauer, Head of Consumer Lending and National Banking at Citizens Bank, to discuss developing a student loan repayment plan once forbearance ends on May 1st. Eric, it's great to have you with us. Welcome to Trade Talks.
Great to be here, Jill.
How can students and families create a student loan plan if they haven't paid much attention to it since forbearance began?
One of the most important things is just to make sure you understand what student debt you have. What are the number of loans you have? What are the terms and conditions of those loans? Just getting kind of reacquainted if you haven't actually looked at it in a while. Many people have been under some form of forbearance in the federal program since March of 2020 and haven't really thought about it in quite a while. And what's interesting is right now is a great time to get a handle on this, even though the Biden administration has pushed out the repayment of federal loans to May 1st, and who knows, maybe it'll get extended beyond then. This is a great time just to get control of this as a consumer, as a borrower. And you don't have to pay interest, so you can actually pay down debt faster. If you start making payments on your federal loans, you can just start paying that down and it all goes to principal. You can consolidate some of those loans within the federal program and just take action to make it simpler and better. And quite frankly, it's a good time to think about refinancing. Simplify your debt position and refinance into lower rates while rates remain low.
And Eric, now that the Biden administration has extended forbearance to May 1st, what are the need-to-know points for borrowers?
I think the number one thing is just understand the terms and conditions. Federal loans provide some benefits, including like income-based repayment plans. But just knowing how many loans you have, understanding the interest rates of those loans and what interest rates you could possibly go into when these things start to repay again. What's the cycle? Rates are going to go up. That's one thing that's pretty clear. Rates are going to go up at this point in time. And so this would be a good time to lock into a lower rate. So first is get an understanding of your debt position. Number two is understand, what potential rate you could be paying in the future.
Right. And do borrowers need to be aware of inflation and how it could potentially impact consumer activity?
Yes. One of the things that, how does inflation affect folks? First, inflation makes everything cost more. You can see it in the supermarket, you can see it in the gas prices, you can see it in normal consumer goods. And so just getting a disposable income position based on the overall rise of goods is important. But what's more is the Federal Reserve is likely going to start, and they've signaled, they're going to start increasing interest rates. And as they increase interest rates, it's going to have a direct impact on loan rates. And so now is a good time to really latch on to lower interest rates while the Fed decides what it's ultimately going to do to combat inflation. Having said that, I think refinancing is a great option for consumers to be able to afford additional monthly budget. What people don't realize is folks that come in here at Citizens and refinance student debt save on average of about $2,600 per year or $220 per month. That's a pretty good amount of savings that go into your pocket to help you combat these rising prices in other parts of your life.
Oh yeah, especially if you consider, the number of years it takes to pay student loans back. Even if it's a couple of years, it's almost $5,000, even more than $5,000 in savings. So certainly it makes sense to take advantage of it. Eric, as we think about the health of consumers, the consumer spending factors, thinking about refinancing student loans and just looking at your debt picture in its entirety, would you say that consumer behavior has improved as a result of the pandemic? What are you seeing at Citizens in terms of what they're looking for when it comes to whether it's banking products or education or resources from advisors?
Yes. So Jill, what we're seeing, we can see it within our credit card debt or our credit card spend habits, et cetera, is everybody's spending more all the way across. The spend is beyond pre-pandemic levels in terms of how much people are spending. But what we're also seeing is people are saving more. So it's very interesting is the level of savings, the how much people have just put into their savings account and kind of left there. It's very interesting. So I would anticipate that as we go through this, the consumer is extremely healthy. The consumer is going to continue to be healthy as we go through this recovery. And quite frankly, while inflation is higher. We're at 39-year high in inflation in the U.S. It's not to the point where people have, kind of, gone inward and stopped their spending habits, which has been a very positive sign.
Right.
But I think it is very important that folks know that interest rates are going to rise, and therefore acting, whether it be on your student loans, whether it be on mortgage loans, whether it be on anything else you've just been waiting for that last salvo in rates. I think we're kind of approaching that last salvo in rates.
All right, Eric, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.